Hey, it's Justin again. So today I'm going to talk to you about credit score hacks, ways to improve your credit score, and things you need to know and need to do to maintain a high credit score. So make sure you watch until the end. There's a lot of good tips in here. If you have any questions, let me know. Otherwise, like and subscribe for my weekly videos. So tip number one, keeping your balance at 30% of the limit. You want to have available credit. If your credit cards are maxed out, you got to work on paying them down to about 30% of the limits. By doing that, it's going to help your scores come up quite a bit. Your balance to limit ratio has a big impact on your credit score. So you want to keep those balances at 30% or less. Tip number two, if your balances are over 30% and you can't immediately pay them down, another thing you could do is just call and ask them to increase your credit limits. So let's say right now you have a $5,000 credit card with a $5,000 balance. It's going to be dragging your score down. But if you get them to raise that limit to $10,000, well, now you're only utilizing 50% of it. So your scores are going to come up from that. Do not do that if you're going to max it out. Seriously, don't. But that is a great way to lower your usage and have more available credit, which will help your credit scores. Tip number three, if your spouse or you have a family member or loved one that has credit accounts that they've had for a long time, that have low balances and a perfect pay history, you could actually have them add you as an authorized user to those credit cards and you'll absorb that history. Let's say you have they have a credit card that they've had for 10 years. And it has a perfect pay history, low balance, and they add you to that card, it's going to look like you've had that card for 10 years, and all the positive impact that card has for them is going to pull over to your credit report. So that's a great tip right there. Your spouse, loved ones, family, it's kind of hard to get a friend to add you to a credit card. It doesn't really make a lot of sense, but usually a spouse will do it, hopefully. So getting a spouse or family member to add you to a credit card as an authorized user. Some credit cards don't report it that way, so it doesn't always work, but a lot of times it will, and there are credit cards that do this. I have my clients do it all the time, and it will increase your scores. So tip number four, do not ever close your accounts. When you close your accounts, you're shooting yourself in the foot. A big part of your credit scoring is based on your average account history. So if you've had one account for 4 years, one account for 3 years, one account for 2 years, that's 9, right? 9 divided by 3 is 3. So you have an average account history of 3 years. The longer that average account history is, the longer your average credit profile is, the higher your credit scores are going to go. So when you close an account, you just took that account out of that equation and your average account history is going to go down. So step 4, tip 4, whatever, never close credit accounts. Credit tip number 5, do not pay off collections unless they delete it. So you never want to pay off collections unless they agree to completely delete it. When you pay off a collection, you're putting recent activity on a negative account. So let's say you broke a bone, right? You break a bone and then over time, it might never heal 100%, but it'll get better and better and better. Let's say 2 years after you broke a bone, you go back and have to re-break it to reset it. That's exactly what you're doing when you were paying off a collection. So let's say that collection's 2 years old and then you go and pay them. Well, you just took an account that was aging and kind of getting older and older and not having as much impact, and you just brought it to the front of your credit report, basically. You just put recent activity on a negative account and you just made the impact of that negative account start all over for the most part. In the long run, it's good. Years later, it'll recover better, but in 7 years, that stuff's going to fall off anyways on collections. The way to handle a collection, instead of paying it off, is to call the collector and say, I will pay you if you delete this. Not that you'll show it satisfied, not that you'll say, hey, it's good now, it's in good standing. They will promise you, no, it'll help your credit, pay us. They're full of it. Do not pay them. The only way you pay them is if they send you something in writing confirming, if you pay this, we will delete it. Do not take any alternative for that word. They need to delete it. So that's tip number 5. Get rid of the collections by getting them deleted and your scores will go way up. Otherwise, if you pay them, your scores are going to come down. Even if they tell you it's going to show satisfied, it's going to help your credit, don't believe it. Don't pay the collections unless they delete it. Tip number 6, a straightforward one. Make sure you pay your bills on time. Even if you can only pay the minimum payment, you have to have a good pay history. You're really hurting yourself and setting yourself up for failure by not paying these things on time. Your scores are going to tank. So you got to pay your minimum payments every month. So be on time with your credit payments. And then 2 last ones. So number 7, on number 7, one thing you want to do if you have had significant negative events happen with your credit history, and you haven't established new credit, so if you've had a bankruptcy, multiple late payments, collections, judgments, things like that, and you haven't really had any new credit since then, you're hurting yourself by doing that also. You need to go get new credit, new credit cards. So even if it has to be a secured credit card, you're going to have to establish a new credit history to show the credit companies, the credit bureaus, that you look, I've gone past that event and I'm reestablishing a new history now. I'm able to get new cards and maintain them. Look, I'm on time now. So you have to establish a new credit history. My suggestion or my tip is go ahead and get a couple new credit cards. If they have to be secured, they have to be secured. And when you get those cards, set up like your Netflix, your internet, something that's a small, consistent bill where it's a small amount and the same amount every month. Set up auto pay on Netflix or on your internet from your credit card. So every month your credit card is going to be used to automatically pay that bill. That'll never change. It's always the same price. And then set up auto pay from your bank account, from your checking account, to pay off that credit card in full every month. So if you know your Netflix is $16 a month, then charge that $16 a month to the credit card, but automatically have the $16 a month pay that credit card off from your bank account. Every month do this and it'll help rebuild your credit. And then tip number 8, the best one, my favorite one, is just pay off all your debt. Honestly, credit cards, high interest, there's bad debt and there's good debt. Credit cards are bad debt. Auto loans are typically bad debt. You want to pay that stuff off. If you pay off the credit cards, don't close them. Leave them open, but you got to pay them off. I've honestly had a credit card since I was like 20 when I reestablished my credit, because my credit was jacked when I was younger. They charge me, I think, $60 a year. I hate it. Every year when I get that bill, I get mad and I want to close it, but that's a long history that I have on that card, and I don't want it to hurt my scores. I want my scores to be higher, so I don't close it. Unfortunately, I'm still paying the $60 a year for that stupid card, but I won't close it because I know it's going to impact my score negatively. So again, try to pay off all your debt. Use the debt avalanche or the debt snowball method. I'll do a separate video on that, on some tips on paying off credit, getting out of debt, things like that, setting a budget. But in the meantime, if you can chip away at your debt, chip away at it, but just don't pay it off. That's all I got today. Thank you for watching. Make sure you like and subscribe. If you like the video, give me a like. Drop some comments if you have questions. And I'm going to keep putting out videos weekly with different tips on personal finance and mortgage. Thank you.